Hello traders, it's Sunday, July 3rd, and it's time for our WMoption's weekly summary of financial markets. On nearly all fronts, the main word this week was Brexit and how global markets are reacting to it. Even in Asia, which has enough problems of its own, officials were busy setting up buffers and calming markets. China's Li Keqiang and Japan's Shinzo Abe called for global cooperation and promised they would do all they could to maintain stability. In Japan's case, this indicates possible forex manipulations, and in China, more of the same. China's GDP outlook was lowered to 6.2% with end-of-the-week PMIs, and Japan's retail sales disappointed onlookers. Otherwise, markets returned to normal quite swiftly, with the yen, Aussie, and New Zealand dollars ending the week in an upbeat mood, and indexes closing the trading week slightly up. U.S. markets took time off from Europe to look at the bank stress tests that took place over the week. These were enacted after the too-big-to-fail fiasco of the 2008 meltdown. Most of the banks passed the test, and legislators said that shareholders can smile. One bank that brutally failed was the U.S. branch of Deutsche Bank. The week began with an equity slowdown, led mainly by banks, but indexes here too were quick to recover. The uptrend flattened, though, as the week drew to an end and data beat optimism downward. On Wednesday, the IMF warned against America's shrinking middle class, reiterating income stagnation. Still, consumer confidence soared to 98 from May's reading of 92.4. And finally, Europe, where more people want out of the Union than in, where political mayhem is in progress, led by the UK, apparently a country that nobody wants to lead. Mark Carney on Thursday promised to instigate a rate cut and other sweets to maintain London's viability as the region's financial sector. This as Paris begins to verbalize a dream of replacing the city. And that just as both England and Europe had their credit ratings cut by Standard & Poor's and Moody's to AA. On Tuesday, hints that further integration of Eurostates into the Eurozone were dismissed by Poland as an outrage and an ultimatum. The pound tried hard to react optimistically to George Osborne's promise of contingency plans, with pessimism to the resignation of David Cameron's, who is blaming the Brexit success on Angela Merkel's immigration policy. Everything else is more or less the same, with UK consumer credit soaring and Eurozone consumer confidence still negative. This coming week, we'll be keeping our eyes on service PMIs on Tuesday, U.S. services and a Fed Open Committee meeting on Wednesday, Japan's Haruko Kuroda's speech on Thursday, and U.S. employment on Friday. Thanks for being with us. Join us in the days ahead for our daily market reviews, and have a great trading week.